Airbnb is one of the most well-known brands in the world, yet its stock is down 32% from its one-year highs, and nearly 14% after reporting its earnings yesterday. The business has also continued to grow its revenues and its cash flows, which is leaving many investors asking the question of if Airbnb stock is looking attractive, or if it is a stock to continue avoiding. I went through Airbnb's earnings, its investor presentation, and their conference call to find everything investors need to know, and answer the question of if the stock is looking cheap today. And in today's video, I want to share everything that I found, and my opinion on the stock with you. However, before we get into the video, I want to let you all know that Stock Unlock is currently having a 25% off sale. Stock Unlock is the stock analysis and portfolio tracking platform that I use here on my channel, and it's truly the most value-packed platform out there. So if you have been waiting to subscribe to Stock Unlock, or you have been meaning to check it out, then there's no better time to do so than now. You can get 25% off a yearly subscription or 25% off a monthly subscription for the next 6 months. This means you can now get an annual subscription to Stock Unlock for less than $6 per month, or our highest tiered plan for $15 per month. Do not wait though, as this deal is only on for another 6 days. So if you're interested in checking out Stock Unlock and saving on your subscription, then click the link in my description. Now, before we hop into Airbnb's earnings, I do have one other really quick announcement, and that's that I just got a new kitten. I think that you guys just saw him in the background. He is 3 months old, and his name is Minnow. He's got a ton of energy, so you guys may be seeing him walk around and bounce around in the background. But yeah, we officially have a third cat who is Minnow, and he is probably going to be joining the channel quite a bit in upcoming videos. All right, now with that out of the way, let's hop into Airbnb's earnings. So here we can see that Q2 revenue came in at $2.75 billion, which is up 11% year over year. So Airbnb's top line revenue is continuing to grow. The company also generated $555 million in net income. And down here it says we generated $1.1 billion in net cash provided by operating activities and $1 billion in free cash flow in the second quarter, which is growth of 16% year over year, by the way. Our trailing 12 months free cash flow was $4.3 billion, representing a trailing 12 months free cash flow margin of 41%. Now, for those of you who may not know, a 41% free cash flow margin is very, very high. I think that Airbnb is one of the top 10 companies in terms of their free cash flow margin. So this is a highly profitable business that is also growing its revenues by 11% year over year still. But continuing on, we can also see that gross booking value was up 11% year over year, and nights and experience booked was still up 9% year over year as well. So it seems like there are more nights being booked on Airbnb year over year, and the booking value of these nights is also increasing. And overall, this quarter looks like it wasn't a bad quarter for Airbnb at all so far. So now let's move on to the shareholder letter that was written by one of the co-founders and the current CEO. And they say, we generated $1 billion in free cash flow in the second quarter and $4.3 billion in free cash flow over the trailing 12 months, our highest ever. So the company is literally producing a record amount of cash flow right now. In Q2, we surpassed 8 million active listings, driven by continued growth across all regions and market types. We've removed over 200,000 listings that failed to meet our guests' expectations to ensure we consistently deliver high-quality stays. So Airbnb is having more listings come onto their network, and they're also removing low-quality listings to maintain a high-quality platform and high-quality stays across their network, which is a good thing to see. We've rolled out hundreds of new features and upgrades to our platform. And this is part of Airbnb doing what they call perfecting the core service. So on the existing Airbnb platform, they are continuing to roll out hundreds of updates. And as a user, I have noticed that Airbnb is actually continuing to get better. And then they talk about expanding beyond the core. We continue to drive growth by investing in underpenetrated markets. We're also expanding Airbnb's brand positioning beyond travel accommodations with the global rollout of Airbnb Icons, a new category of extraordinary experiences that we launched in May. This will be critical as we expand our offerings in the coming years. So one of the things that Airbnb is currently doing is they're actually trying to become more than just a short-term rental network or a short-term rental platform, essentially. So what they want to do is actually expand beyond what the business is today and offer new verticals and ultimately expand the business beyond just being a short-term rental company so that they can expand into new verticals and ultimately drive revenue growth through introducing new products as well. So this is going to be interesting to see what Airbnb offers over the coming years because they're planning on expanding and offering a lot more products in the coming years. So yeah, we're going to have to keep track of how this plays out for Airbnb. All right, moving on though, this says that in Latin America, nights and experiences booked grew 17% year over year, and in Asia Pacific, nights and experiences booked increased by 19% year over year. So Latin America and Asia Pacific are where a lot of Airbnb's growth is coming from, and these markets are still underpenetrated, and I think that travel over there is increasing significantly. Now moving on to the next screenshot, this is on stock-based compensation, and we can see that for the full year of 2024, Airbnb is expecting their stock-based compensation expense to grow between 20 and 25% above 2023 levels. So stock-based compensation is continuing to grow quite a bit over at Airbnb, and it's actually growing faster than the revenue, and the profits are growing as well, which could be one of the negatives in this earnings report and could be one of the reasons why the stock is down after the company reported its earnings. All right, moving on to the next screenshot, and this one is the quarterly revenue year-over-year growth rates. So in the second quarter of 2022, Airbnb grew its revenue at 58% year over year. In 2023, it grew revenue at 18% year over year. And in 2024, it's now grown at 11% year over year. Now, ultimately, what this means is that Airbnb's revenue growth rates are starting to decelerate. I also found this image right here on Twitter, which is Airbnb's year-over-year revenue growth rate per quarter since the third quarter of 2022. And here we can see that in the third quarter of 2022, it was 29%. And then it has been decelerating all the way down to here of 11% year-over-year revenue growth. And in the third quarter of 2024, Airbnb is now expecting 9% year-over-year revenue growth. And in my opinion, this is the main reason why the stock is down so much after reporting earnings, because you can clearly see that the business's growth rates are decelerating and slowing down quite a bit. And it seems like investors don't really know where this trend is going to bottom out, or if it is going to bottom out anytime soon, because the trend is very clearly still going down. All right, moving on. Here we have the quarterly net income that Airbnb has produced. And we can see that last year in the second quarter of 2023, Airbnb produced $650 million of net income. And this year they produced $555 million. So net income actually declined year over year. And the net margin this year was only 20% in the quarter versus 26% last year. So Airbnb's earnings have declined and its net margin has also declined year over year, which could also add to the reason why the stock is down after this earnings report. However, if we take a look at operating cash flow, we can see that operating cash flow did grow by roughly 12% year over year in this quarter, and the operating cash flow margin also expanded to 38%. So Airbnb is actually seeing its operating cash flows increase and its free cash flows increase, but it is seeing its net margin and its net income decline. Now, typically when I see the net margin decline, but the operating cash flow or the free cash flow margins increase and continue growing, it suggests that there is a lot of stock-based compensation going on, which is weighing down the net income on the income statement. Because stock-based compensation does impact the income statement, but it does not impact the cash flow statement, as we are going to see here a little bit later on in the video. But first, we can see that trailing 12 months free cash flow is sitting at that $4.3 billion now, and the trailing 12 months free cash flow margin is also sitting at 41%. So the company is still producing a lot of free cash flow, and the free cash flow is continuing to grow. Now, if we take a look at the shares outstanding here, we can see that Airbnb has a total of 673 million shares outstanding, which is down about 2% year over year. So Airbnb is continuing to buy back shares with its free cash flow, and this is resulting in the overall shares outstanding continuing to decline on a year-over-year basis. All right, so now let's move on to the income statement. And right away, we can see that revenue was up that 11% year over year on the quarter. However, we can see that the cost of revenue is up, operations and support expenses are up, product development expenses are up, sales and marketing expenses are up, and general and administrative expenses are also up. So total costs and expenses did grow quite significantly year over year, which ultimately resulted in the income from operations actually declining by about 5% year over year. And the net income also declined year over year. So it seems like Airbnb's expenses are growing significantly faster than the overall revenue, and that is why the operating income and the net income did decline year over year. Now this next screenshot shows us where the stock-based compensation expenses are going. For example, we can see that product and development had $239 million of stock-based compensation expenses in the second quarter. And in total, stock-based compensation was $382 million in the second quarter versus $304 million last year, which is a growth of 26% year over year. So stock-based compensation did grow significantly faster than the overall revenue, which ultimately resulted in Airbnb's net margin declining, and again, its overall net income declining as well. So now if we head over to the cash flow statement, we can see that stock-based compensation so far during the year has been $677 million versus $554 million last year. However, operating cash flow is now sitting at roughly $3 billion so far for the year versus about $2.5 billion last year, which is growth to operating cash flow of about 20% year over year. Now, we can also see that there is basically no capital expenditures on this cash flow statement, and the capital expenditures are under other investing activities, which is only $22 million in the quarter. Now, what I really like about this is Airbnb essentially has no capital expenditures. And what this means is that almost 100% of the operating cash flow becomes free cash flow for the business, which ultimately means that Airbnb is a highly profitable business and that it has generated almost $3 billion in free cash flow so far year to date. Now down here, we can see that Airbnb has spent roughly half of this free cash flow on stock buybacks with about $1.5 billion spent. And then at the bottom here, we can see that Airbnb has increased its cash position by $5.5 billion so far year to date. So Airbnb is continuing to grow its cash position with organic profits, which is a good thing to see. And the company is cash rich right now and sitting on a ton of cash. Next, I want to share one screenshot from the transcript that I thought was very interesting. So this is Brian Chesky, again, the co-founder and CEO of Airbnb, where he says, generative AI, ChatGPT launched late November 2022. When it launched, I think we all got incredibly excited. You had the feeling that everything was going to change, but I think that's still true. But I think one of the things we've learned over the last, say, 18 months or nearly 2 years, 22 months since ChatGPT was launched, is that it's going to take a lot longer than people think for applications to change. If I were to think of AI, I'd probably think about it in 3 layers. You have the chip, you have the model, and you have the applications. There's been a lot of innovation on the chip. There's been a lot of innovation on the model. We have a lot of new models, and there's a prolific rate of improvement in these models. But if you look at your home screen, which of your apps are fundamentally different because of AI? Like fundamentally different because of generative AI? Very little, especially even less in e-commerce or travel. What we need to do is we need to actually develop AI applications that are native to the model. I do think Airbnb will eventually be much more than a search box where you type a destination, add dates, and find a listing. It's going to be much more of a travel concierge. It's having a conversation, learning, adapting to you. It's going to take a number of years to develop this, and so it won't be in the next year that this will happen. So basically what Brian is saying here is that if you actually take a look at how AI has been implemented in apps across the App Store or on your device, there's actually not a lot of development or applications that truly use AI or leverage AI. And I have to agree, AI so far, in my opinion, has been very overhyped, and it hasn't actually been that useful for the everyday person or creating a lot of apps that are truly AI powered. A lot of platforms like to say that they are AI powered now, and you can leverage AI in certain ways, but it isn't super useful quite yet. And what Brian is saying here is that Airbnb wants to change this, and Airbnb wants to create an application that is actually powered by AI entirely. And what he also says is that he wants to transform Airbnb from essentially a search box where you can find short-term rentals and stays to an actual travel concierge and have a conversation with this application, and it will learn and adapt to you, your travel needs, and your travel wants, and help you ultimately have the best travel experience by catering and creating a travel experience for you specifically so that, again, you can have the best travel experience possible. And this could get pretty interesting, and I don't really know how Airbnb is going to roll this out, but this is what the company is currently working on, and over the coming years, they do want to launch this, and this could potentially be pretty amazing for myself as someone who does travel quite a bit. So I'm going to be keeping an eye on Airbnb and their launches to see really what these products coming out are going to be. All right, now let's head back over to Stock Unlock, and we can see that Airbnb has a market cap of $73.6 billion in the market today. So if you go 73.6 divided by $4.3 billion and trailing 12 months free cash flow now, it means that Airbnb is selling for about 17.1 times free cash flow. Now, if we go 100 divided by 17, this means that Airbnb basically has a 5.9% free cash flow yield on the cost of the shares today, which I do think is a pretty high free cash flow yield in this market because the bonds are offering around 4% right now. So basically Airbnb is offering a significantly higher yield to its shareholders than what bonds are currently offering. And in the Intelligent Investor, it says that this would suggest that Airbnb is actually selling for a margin of safety today because, again, its yield is significantly above what the risk-free rate or bonds are offering. Now, additionally, a 17 price to free cash flow isn't a really high multiple to pay for a business that is continuing to grow its revenues and has significantly high profit margins and additionally has a really strong balance sheet. So all of these things together make it seem like Airbnb could actually be undervalued in the market right now and produce market-beating results going forward. And to show you what I mean here, let's head over to Stock Unlock's discounted cash flow calculator really quickly. So we're going to project out the free cash flow over the next 5 years, and I'm going to say that Airbnb is going to grow its free cash flow by 9% annually and continue buying back 2% of its shares on an annual basis. Lastly, I am going to say that Airbnb is going to trade for a 20 price to free cash flow, which I do think is pretty fair for this business if it can maintain growth over the next 5 years. And with these metrics right here, which I do think are pretty conservative, we do get a compounded annual growth rate to the stock of 15.3%, which is a market-beating return. And if we scroll down, a 9% annual free cash flow growth rate over the next 5 years would mean that Airbnb would have to produce about $6.6 billion in free cash flow by the year of 2029. And again, I could see the company actually producing this, especially if they do launch new products and those products are successful. So it seems like the market is not pricing in a lot of growth to Airbnb stock right now. And if the company can actually continue to grow its free cash flows by at least 9% annually, then it looks like it could produce some pretty strong returns over the next 5 years. So this is definitely a stock that I am going to watch and continue paying attention to. And I do think that there is a pretty strong argument that Airbnb is looking undervalued in the stock market today. However, I have not pulled the trigger on Airbnb shares yet because there is something inside of me that is making me uncomfortable with the idea of owning this stock. I don't really know what that feeling is coming from, or where that feeling is coming from, I should say, but there is something that is making me uncomfortable about this stock. And I do have to only invest in stocks that I do feel comfortable with, because if you are uncomfortable with your investments, then that will lead you to making some pretty poor investment decisions that are fueled by emotion in the future if things do end up developing in a poor way, or if the stock does continue to fall. So I really do prioritize being comfortable with my portfolio and with the stocks that I do own. And since I am not entirely comfortable with Airbnb for some reason, it's just not a stock that I can buy in my portfolio quite yet. Maybe I need to do some more research or brush up on my research or just gain more conviction in the stock before I end up buying it. But I would love to hear what your guys' thoughts on Airbnb stock are after it has fallen 14% after earnings. Are you guys buying it or are you continuing to avoid it? Let me know down in the comment section below. Also, if you guys are interested in checking out Stock Unlock, which is the platform that I use here on my channel, and getting 25% off your subscription, then again, click the link in my description to go and lock in your discount. We do not do sales very often. They're quite rare for us. So you're not going to see another sale for quite some time. So this is the time to go and check out Stock Unlock and lock in your discount. But with all that being said, that is going to wrap up the video for today, everyone. So thank you so much for watching. As always, I truly do appreciate it. And I really hope to see you all again in my next one.